So I will just go ahead and kick us off and just do all the table settings so that everyone's on the same page. Um, so yeah, Guy helped us with an awesome call last week, where we kind of did basically like an intro. I would think of as like a essentially an intro to Mayflower. And we talked about all the pieces of the Mayflower update. So we talked about sunrise improvements. We talked about Silo V3. We talked about rebalancing of seeds per BDV of unripe assets, and then we talked about the way that deposits are indexed. Um, we talked a little bit about deployment of wells and why, and then yeah, we talked about wells, and a little bit on pumps. But I want to kind of take this call in order to get us to a. So the reason of this call is that I think we all see that there's just like a little bit of general. I don't like the word apathy, but I think that there's I think overall, like the community's just a little bit, I don't know the word for it, and stagnant isn't the right word for it either. But I think like I think there's an opportunity to get people excited about what's coming down the pipeline. And I know we talked about this a little bit when we did kind of our original technical deep dive. And I think there's an opportunity. So essentially, what we want to do is we want to spend the month of May and probably like half of June, in order to do a large revamp on the roadmap. So we want to do something like a Bean manifesto of some kind, where we can kind of get people re-excited about the project and the protocol by articulating to them what's coming down the roadmap and the pipeline. So, markets are generally forward looking. So if we can get people a little more forward looking than backward looking, I think we can appeal to a larger audience because, we feel like a lot of the content, like we've been pretty consistent with cadences and stuff, and it's not really breaking through to outside of kind of the Bean ecosystem bubble, which we have an incredibly strong bubble. But we think that there's a lot of interesting things going on here that would get people excited about what's coming down the pipeline, and so we want to download all that information from you guys so that we can put it together in content over the next basically month, mostly through the month of May. Basically thinking like back half of May and then front half of June. And so we want to do like a whole strong month of content push that's going to let us help us articulate like what's going on in the Bean ecosystem and what improvements are being made, what changes are being made, what developments are being done, so that and the reasoning behind this is that we felt like so we started to do some like thought experiments about who kind of that incremental buyer is, like who's the next guy that's not in the Bean ecosystem that's going to come into the Bean ecosystem. It's like probably somebody like, at least like a lot of the guys at Scribe, a lot of the people at Scribe are more or less in that main demographic of like, okay, well, maybe some guys aren't necessarily in the Bean ecosystem, and how would we convince them, putting ourselves in the shoes of like that incremental next participant. So, how can we get them excited about joining the ecosystem? Okay, well, it's probably something along the lines of getting them excited about what's coming down the pipeline so that they're like, oh, okay, we can do a little bit of a narrative shift. We can do a big PR push, things like that. And then, yeah, only other thing I wanted to throw out is like, yeah, we have the podcast with Fiscus Digital at 2 my time, so 3 hours from now. So just want to put that on the radar, but that's why we want to do this conversation. So we talked a little bit about Mayflower, but we want to kind of also get any other things about Mayflower that you guys think, but also kind of take it one step further and let's talk about Tractor and some of the other things that are coming down the pipeline. So we'd love to get an idea of the timeline and pipeline for basically the rest of the year about what people can expect so that we can put that into content and then we can get other people that are not in the Bean ecosystem excited about what's happening here.
Cool. Thank you. So, a couple high-level thoughts. First, the Mayflower update is going to be both very significant in a variety of ways and probably the only major upgrade to Beanstalk this year. The reason is that at this point, development timelines for any large update take 8 to 12 months typically, and it's already almost May, so it's unlikely that before the end of the year, there's another major upgrade similar to the scope of Mayflower. So, in terms of what else is happening for the rest of this year, it's probably going to be smaller deployments or upgrades that do not require major code changes. So the high level is that this would be like, for example, different tractor markets where different Beanstalk assets can be traded against one another. So more secondary markets for Beanstalk assets, but that's different than a fundamental upgrade to the protocol itself, if that makes sense.
Okay. Okay, so that's a good point. I think I kind of want to look. So we went through most of Mayflower, and so maybe we can kind of run through some of that and see if there's anything else that you guys wanna kind of touch on there. But I think Guy and Silo Chat were pretty um, thorough about everything that's going on and kind of between Sunrise, Silo V3, and then Wells. Maybe let's start with Wells since we didn't get too much time on Wells. Um, I'd love to kind of hear your guys's maybe the thought process behind Wells.
So the punchline is that in a post ETH merge environment, all of the on-chain AMMs are not multi-block MEV resistant. And so Beanstalk, as a protocol that is uh, trying to be as censorship resistant, manipulation resistant as possible, uh, there is a need for on-chain price discovery and on-chain price measurement. And the current Oracle solutions for on-chain AMMs simply are not multi-block MEV resistant, making them highly unattractive options for Beanstalk when it comes to pricing beans against other assets. Uh, Additionally, if you look at the way that AMMs are currently architected in DeFi, they are generally non-composable. In particular, the oracles and the functions that are being traded through the AMM are very cookie cutter, and there's no flexibility or composability between them. And so Wells is the answer to those two problems, or two main problems. One is that there is a multi-block MEV resistant oracle that has been implemented, and the second is that the pricing functions and the oracle options are totally composable. So you can pick and choose a pricing function and pick and choose an oracle. And in short, that is the basis for an AMM that Beanstalk can use, and in theory, any other protocols can use if they so choose.
Okay. And so what's the give us like the best case scenario? Like what does a fully functioning Wells AMM kind of look like? Like, what kind of assets are being traded on there? Are we doing like, is
When you say fully functioning, do you mean like upon deployment in a month or two, or do you mean in 2 years?
yeah, I guess like yeah, let's do 2 years because I want to get like the big picture, like what's the ideal circumstance so that we can get people kind of excited about that.
Yeah, I mean, to be honest, this is where I get a little bit nervous about being too forward looking because to some extent it's unclear who will build all of this stuff. So from our perspective, it's like the goal is to provide the basis for all of this stuff to be created, but we don't necessarily expect to be the ones building all of it. Now, with that said, the vision for what a fully functioning on-chain AMM might look like 2 years from now is that you can trade arbitrary assets against arbitrary other assets, and you can take leverage, you can trade derivatives, and there are liquidations native to the AMM, and all of it happens within a single market structure. So the starting point, what's being deployed in a month and a half, is a very basic spot market that is a slightly more generalized implementation of current AMMs. But where we hope to see this go is a full functioning on-chain exchange, which is highly competitive in terms of what you can trade and how you can trade it with current centralized exchange option. So that's where we hope this will end up in a couple years, but we are very far from that at the moment.
And then what's okay, give me like the impacts, right? So like what's like the big impact that we can point to and be like, "Hey, this is a big deal because this is going to happen."
Well, it's probably not such a big deal from that perspective. It's more a big deal in terms of what is being prevented. So, like, if you look at multi-block MEV, that is potentially very dangerous for a system like Beanstalk. And so, this is the mitigation of potential risks, not necessarily realized risks. So, this is when it comes to building a strong foundation for Beanstalk to succeed in the future, this is a big step, but it's not solving any like major problem that is actively hurting the system. It's more a potential problem in the future that needs to be solved in order for Beanstalk to succeed.
So essentially like and so is this more so for like the curve 3 pool? Like the bean curve 3 pool like
Well, the Bean 3 curve pool is not multi-block MEV resistant. So something that will have to happen over the next couple months is some sort of migration of liquidity to multi-block MEV resistant pools, which will be in the wells.
um w- what is your take on um why bean ETH, why people are so excited for the bean ETH pool?
Honestly, hard to know. Uh, it
I just
probably a
can I
go
just jump
ahead.
in and say something? Yeah,
Yeah,
I
please.
thought one of the benefits of Wells was that there's going to be zero fee AMM. So with every other AMM, you have to pay a fee. So theoretically, let's say you have a USDC Bean pool and you have a Bean ETH pool, and these are all zero fee, then theoretically you can go from, for example, USDC to ETH without paying any market maker fee, and therefore it could be very profitable for traders to, rather than trading on Uniswap or something else, to trade with Wells. So that could actually bring a ton of trading volume, through Wells, which brings a lot of attention to Beanstalk. And because then you can also provide liquidity with Wells and get seniorage rather than the LP fees. It's just like an entirely different way and an entirely new concept of an AMM. So that to me was kind of one of the exciting things about this. But maybe I'm missing the point on the
No,
benefit.
you're not missing the point at all. This is
Okay.
at least in terms of trying to highlight the immediate benefits. Like the thing you're talking about, Pizza Man, is more once there's a network effect around wells and there is lots of liquidity in various wells, such that now you have low slippage trades you can make across a variety of assets. That's probably not going to happen day one, particularly because the the fact that there are no fees for market making or providing liquidity means that there needs to be some other incentive to provide liquidity typically. And in the case of wells with no fees, that will likely be bean seniorage. And so it is a little bit of a chicken and egg problem where once we have a significant amount of assets trading against beans in zero fee wells, you may get to that point, but Beanstalk will have to attract the liquidity first. So yeah, I feel like that is something that, from an ecosystem perspective, we hopefully will get to as more liquidity starts to trade through wells or trade in wells and there's more volume there. But from a like why are wells being built perspective, it's primarily a multi-block MEV resistance issue and a composability issue. But the zero fee component is certainly something that at the margin will help Beanstalk because currently if there's like a couple basis point fee to trade in Bean 3 curve, then you can basically expect the deviation from peg to be at least that amount because otherwise you're going to be buying above peg and selling below peg just to repeg it.
Is that zero fee possible exclusively due to the seniorage?
Well, anything is possible in the sense that the pricing function that is used in the AMM can be effectively arbitrary. So you can have a constant product function with no fee. You can have a constant product function with a fee. Ultimately, the architecture is agnostic to that, but the initial well deployment will be a constant product function with no fee. But in theory, there could be a constant product function with a fee. There could be a stable swap pool function with a fee or without a fee. So the fee is like a variable that the DEX architecture supports. With that said, it's sort of hard to imagine people wanting to provide liquidity to a zero fee AMM without seniorage.
Yeah.
Yeah,
And
I think Pizza Man was on the right path of like, like I understand the hesitancy of like over promising like this early in what's going to happen. But for us, like we're trying to basically like spin up like we're trying to spin up this narrative about what this like end game bean ecosystem looks like. And so like what's helpful to us is hearing like what does the idealized world look like if everything goes perfectly to plan. And like not that we're going to like start promising these things, but what we want to do is we want to paint this picture about what the end game looks like so that people can see that picture, appreciate it, and be like, okay, I want to kind of be a part of the journey to get to that picture. So like what we're kind of looking for is like what does this ideal world look like? Like what does the world look like when Wells is like what you guys imagine the like peak progress or like kind of peak point of like, hey, this is everything we've imagined. Like whether it works out or not is like a totally different story. I mean not a totally different story, but we want to get an idea of like what is that perfect scenario where everything is working according to plan, and then what are the benefits for users, because at the end of the day like all of this, the reason for this is that we're trying to get that incremental user excited again. So like I totally get like yeah what it's gonna take network effects and a lot of those things in order to get that final vision of what Wells can be, but that's what we're kind of looking for here is like we want to see what does that perfect world look like. So like hearing that like Wells is the zero fee DEX and that you're LPs are going to be incentivized with senior edge, like that's an innovative model that we think is going to get people excited. So yeah, like more stuff like that is kind of what I'm trying to pull out of you guys.
Noted. And apologies for making you pull it out of us. It is not intentional. So just not thinking about it the right way, I guess. So yeah, that is, thank you, Pizza Man. The zero fee component is important, but it is a Beanstalk specific portion. So yeah, definitely a good shout out.
Kind of on that line too with the zero fee and like you mentioned right away initially there's not going to be that many people providing liquidity, but I do think there will be some number of Beanstalk members who will want to move their liquidity into ETH just to get away from the 3 curve. And I think Breen did some math. I see that he just joined, so maybe he knows or remembers what it was exactly. But there's going to be like only some small fraction of liquidity will be required in order to make trading basically like through USDC to Bean to ETH a better deal to trade through Wells like than through Uniswap, for example. So if we can get anywhere close to whatever fraction of liquidity is needed for that, then you could make the argument that like, hey, there's no need to trade through Uniswap anymore if you can trade through Wells. And that to me is like, that's really huge. And so that's a reasonable thing to, I think, try and like, if Breen has that like chart handy where he did the math on, here's the amount of liquidity required, that seems like a very achievable like thing to reach. And when you reach that point where you can compete, with something with as much liquidity as Uniswap, but with only a fraction of the liquidity, that's like a really big, argument and driver for people to then provide liquidity to Beanstalk in order to get the seniorage rather than, just hoping to get some small amount of fees through something like Uniswap or Curve. And therefore, like, that's kind of the path to taking over DeFi with Beanstalk.
Can somebody get this guy on microphone or something? This is epic, Pizza Man. More of this.
So talk to us a little bit about like what the architecture of Wells is going to look like. Like, when we say like constant product formula, like, is it going to be more similar to uh more similar to like a Uniswap, like a x times y equals k, or is it going to be more like, a three curve, or like a curve pool where it's like kind of like like a large A factor or something like that? Like, talk to us a little bit about what's Wells going to look like? Like, what kind of comparisons can we draw? What kind of analogies can we give so that it's easier for people to understand what's going to happen?
Yeah, so the initial function will be the x times y equals k, but in theory, the architecture can support arbitrary functions. So having a curve stable swap type of function, or like the Kronia stable swap function, those are all on the table. And if someone writes that function and then we collectively have it audited, those can just start to be added to the repertoire of functions that the AMM supports.
Um, what was the reasoning behind deciding that we needed to do Wells?
It was really the multi-block MEV resistance primarily.
How big of a problem is this? How big, or how difficult of a problem is this, I guess?
Well, big and difficulty are different. There were some numbers presented by Brendan in the DAO meeting a couple weeks ago, or one of the dev calls, I think, around the potential occurrences of multi-block MEV resistance, and it's quite frequent. And in short, therefore, it's in the post-merge environment, it's a very big problem. Like, you'd expect multi-block MEV opportunities to happen very, very regularly, and therefore it's like necessary to solve.
Also, we'll just, add in here first off, I think the idea for the DEX originally came from the zero fee model. Just discussing one day how, seniorage can be harnessed to make a more competitive DEX than anything exists through zero fees. But this particular iteration of, the Wells is related to the multi-block MEV. What's important to realize is, post-merge, the only viable solution that exists today on-chain is an off-chain oracle. This is, kind of apparent through the fact that, protocols like Euler Finance actually switched from using Uniswap v3 to Chainlink post-merge because of fear of potential multi-block attack. Now, anytime you're using off-chain security, you're no longer relying on the Ethereum or the security of the Ethereum network in order to, get your security. So, inherently by using Chainlink, you're, introducing a new weakless link in security to a 21 validator set. I believe, the Ethereum network currently has somewhere over 500,000 validators. So by using a 21 validator set, you're kind of undermining the whole point of using the Ethereum network in the first place, which is security and censorship resistance. So, kind of the current alternative is to basically inherently undermine all the security you have. And, that's essentially why it's so pivotal to build, this on-chain Oracle suite.
Okay, yeah, yeah, I think like
Are,
go
I
ahead.
got a quick question on the same. Yeah. Are there any other like teams, projects building something similar, trying to solve this multi-block MEV Oracle issue, or is this kind of a first idea?
As far as we are aware, no team is. That being said, there could be teams building in stealth. And this is quite frankly something that has really caught our attention, is the lack of care about creating true decentralized solutions on chain, and essentially why we felt like creating a composable on-chain solution that could hopefully attract more attention and more eyes and more developers into kind of the decentralized ethos that really does need to be focused on and is not getting enough attention.
Definitely. Yeah, I think yeah, the more that we've kind of talked about this, I think that's a great point that we can hit on, especially if this is kind of the first or one of the first to be going to market. That's a really big point, and will easily fit the narrative of Beanstalk. So that's great.
So okay, I think that puts us in a pretty good spot for Wells. I think like
Just to add on to the zero fee thing, currently the economics of every other on-chain AMM are that they impose a fee, and then the fee gets taken from the taker on the trade and distributed to the maker in some capacity. Like, that is supposed to compensate the maker for the losses associated with on-chain market making. There have been a lot of not a lot, but there have been some decent good tweet threads on how, for example, providing Uniswap liquidity is a money-losing proposition despite the fee. And so the current setup is that market making on chain is both not profitable and the dexes are very inefficient because of these fees. And so this is like a fundamentally different way of incentivizing liquidity provisioning by saying there is no extra fee being paid from the taker to the maker, and instead the liquidity provisioning is just subsidized by the seniorage of Beanstalk, effectively.
Okay, yeah, this is really good because this we can easily position this as like this is a competitive advantage that only the Beanstalk ecosystem has because no one else has this seniorage or this positive carry that lets you do this. So,
And other tokens may want to lobby to start receiving seniorage. You know, like if you get you deploy a pool, a Bean X pool, you can then lobby the Beanstalk DAO to whitelist the asset and start receiving seniorage, for example.
are there any plans to maybe do like some kind of maybe like bribing of some kind in order to kind of bring in liquidity, like something that's like been happening in like the curve convex, like any thoughts on that in
The
order?
punchline is no, because a lot of that stuff all comes from like very fugazi tokenomics, which we're trying to stay as far away from as possible.
Interesting.
But you could make the argument that you are bribing with seniorage, like to bring liquidity.
Sure, but it's very direct. It's not like there's three other tokens and you have to lock up the tokens. It's like the convex curve reward system is like that basic, the takers paying the makers, and then loop through like 8 layers of abstract tokenomics. But it's not like there's nothing going on there.
Yeah, so you could say that the Beanstalk way is better.
Correct. Exactly. So we're not doing the cockamamie thing. We're just doing the direct, as simple as possible. No extra complexity.
Okay, that makes a lot of sense. So I want to change gears just a little bit, and yeah, like Joey, Rob, if you guys have questions about Wells, feel free to like pop them in. But I want to think about tokenization of deposits, and I'm assuming that that's a precursor to Tractor. Yes.
Generally, yes, although not necessarily.
As
Like,
Tractor is currently implemented,
Yeah.
no.
Tractor supports deposits, so you don't need to implement deposits of 1155s, but it will generally help with interoperability. But it's not directly for Tractor because Tractor technically does support deposits.
The big benefit to 1155 deposits is allowing other DeFi protocols that support 1155s to have access to deposits. The main one being Seaport and OpenSea.
Okay, and walk me through. Okay, let's start at the top, right? Why is Tractor a big deal? Why did you guys want to do Tractor?
So, in short, there is the only reason that you would ever need to post an order on chain is if that order is going to be used for provable liquidations. So what that means is if I'm posting liquidity in a Uniswap liquidity pool, like the only reason that I actually need to post the liquidity on chain is if that liquidity is going to be used for some sort of liquidation system. People are taking leverage out against my liquidity, and my liquidity is being used to liquidate that leverage in some capacity. In every other case, there is no need to actually post the liquidity on chain. So Tractor is effectively making it such that you can sign orders and place orders without needing to pay to post them on chain. So it's like until we have liquidations and leverage on wells, a large percentage of orders can just be placed with Tractor and need not be posted on chain. So it's like a cost savings and user experience thing primarily.
And I'll just add in here, just to amend what Publius said, you know, you need liquidity on chain anytime you need proof of the liquidity on chain, which, you know, includes liquidations, but also includes things like, you know, when protocols need to be able to prove that you have liquidity, such as depositing into the silo, you know, or any on-chain reward mechanism that is going to reward you for having liquidity deployed.
So in the case of Beanstalk, Beanstalk needs wells to price the deposits, but otherwise there's no current need for on-chain liquidity at the moment because there is no liquidation support yet.
There's no liquidation support in wells or two?
In wells, correct. Yeah.
Okay.
Yeah, I mean, someone could build a liquidation mechanism that uses wells as an oracle, but there's no automatic liquidation mechanism that would allow for, you know, kind of, you know, atomic liquidations. But, you know, as far as I'm aware, that doesn't exist anywhere in DeFi. You know, no Curve is planning on building a system like that with their new stablecoin. But there's nothing on mainnet that supports that kind of functionality.
And just to zoom out a little bit, Ishan, this is where things are going, which is the DEX where the assets are traded could be directly integrated with the exchange where leverage is taking place. And so this is the Tractor is like the piece of software that will exist to bridge the gap between here and there. So until we have the point where there is a reason to post all of your orders on chain, you know, in most cases, you could expect the orders to be placed through Tractor. So, for example, you want to sell some pods, you're likely to place that with Tractor going forward.
Purely from the cost savings perspective and just like ease of it, or
Exactly.
like
There's no reason to
Yeah.
pay the transaction cost to post the order if you don't have to.
Mm-hmm.
Yeah, it's a huge UX improvement because you can you skip the transaction and then let's say you want to cancel it, you gotta do another transaction and it's a pain in the ass. So you can, you know, create orders and cancel orders instantaneously. You know, there's no need to do it on chain.
Yeah.
Is that true that you'd be able to cancel it without sending a transaction? Just want to make sure.
No.
Okay, got it. That was also my understanding.
Oh, apologies.
Order creation is free, but order cancellation still needs to happen on chain, unfortunately.
Term, though, it can be a single transaction that can cancel all orders, correct?
I mean, you can do anything in a single transaction through protocols like Pipeline.
I meant cost-wise, because it can be something as simple as cancel all orders before a certain date.
Yeah,
Is this already built?
for the most part, you know, the code is written, but it has not been reviewed or audited.
I guess that would be kind of a helpful thing to start talking about. And I know that these conversations might be like semi pointless in nature just because of how much things change. But I know that we've talked about like the timeline for this, and that it's kind of like a June estimate, mid-June, late June. Is there, I mean, and I know the weekly updates and dev calls, like there will be more frequent updates, but is that kind of still on track? Because it'll be helpful for us to kind of start figuring out the timeline of us
You asking about
creating the content.
Mayflower or Tractor?
Mayflower, I guess both. Mayflower and Tractor.
I mean, maybe Guy is best suited to talk about the Mayflower timeline, but Tractor will be months down the road, given that it has to have internal review and audits and stuff. But you could imagine Tractor being deployed Q3 or Q4 and have some initial markets supported off of it before the end of the year.
The big limitation with Tractor is that it requires, an indexer solution, which most likely is going to be built off chain to, minimize gas. Which is a quite substantial project to be built, and work on that has not yet been started.
On the Mayflower front, the Sunrise Improvements BIP should go out this week. The Silo V3 BIP should go out in late May. And then hopefully Wells can be deployed in early June.
Could you repeat that timeline for me one more time, Guy?
Sure, the Sunrise Improvements BIP will be proposed this week. The Silo V3 BIP should be proposed around late May, and Wells should be deployed in early June.
Early June. Okay. Yeah, I think that sits in right with our timeline. And then Tractor, is that like more of like an end of year type of thing, or what's kind of the general timeline there?
Yeah, I feel like Q3 would be a general timeline. End of Q3.
Okay.
But I think that one we're really making up as far as timeline goes.
Okay. So for this kind of Bean manifesto, we definitely want to hit. So I think the main thing that we'll want to hit is Wells, and I think we have a pretty good idea about Wells. So we'll want to hit basically like Mayflower update, Sunrise, Silo V3, and then Wells, and then kind of end it with kind of Tractor. I think we're in a pretty good. Oh, so can you talk to us a little more about on Tractor, like the infrastructure that it's kind of built on? So it's built on the same stack as like OpenZero, which is Seaport. Can you like talk to us a little more about that and kind of maybe Eli 5 it for us?
So Tractor is intended to be a generalized peer-to-peer on-chain transaction marketplace. It's not built on Seaport. It's similar to Seaport. However, we found Seaport to be limited in the functionality that it provides. And Tractor is an attempt to build a sufficiently generalized version of Seaport such that it's capable of supporting, any arbitrary on-chain financial activity. There's also a fair amount of overhead associated with Seaport that can be removed through Tractor to, create more efficiency on chain. But, kind of the general punchline is, it allows two parties to agree to execute a transaction that is capable of using, the assets of both parties.
Okay, and so the idea is basically like we can set, and so the main assets that this is for is mostly like stock and seeds. Yes.
It can be for anything. The main assets it's for are, the non-fungible assets or non-tokenized assets. Currently there's no way to transfer stock and seeds with the exception of transferring a deposit. So, one could transfer, deposits through Tractor and, downstream of that transfer the associated stock and seeds. But, stock and seeds on their own are not, are not tradable at all yet. What it's for is creating complex on-chain markets. For instance, things like the pod marketplace v2 that allow you to set pricing curves, based on some kind of arbitrary function. It can be implemented through Tractor, and you could pay for that. You could pay to buy pods with a deposit or circulating beans, and the person who is selling the pods could instantly withdraw and have beans. So they could be kind of ambivalent to, am I receiving a deposit or circulating beans? You could create function execution markets where I could create a transaction that says plant on my behalf if I have more than this much beans and pay the person who executes the function. You could say, I want to automatically convert at this price and then pay anyone to execute the function on your behalf. But really just, so any kind of complex financial activity that isn't, currently supported by, on-chain dexes, which is mostly just ERC20 to ERC20, or existing off-chain marketplaces, which is really just, straight, non-complex trades of tokenized assets, meaning ERC20 for 11.55 at a fixed price, or ERC20 for ERC721 at a fixed price.
Okay, nice. Yeah, I think that puts us in a good spot there. Two things I want to hit before we get out of here. One, I appreciate your guys' time doing this because this is definitely helpful. I think this added the kind of color we needed after the conversation with Guy. So, what's if we can give a punchline narrative for at least for Mayflower, right? If I, the average user on chain has a pretty short attention span. So if I were to maybe distill the big impacts down to as simple as I can, what would you what are maybe those punchline impacts that you think maybe we can build around?
So the thing we haven't talked about is the seed per BDV parity. And particularly when we look a little further down the road than just the end of the year, the next major upgrade to Beanstalk could likely be a stock/seed gauge system where the seeds per BDV are now dynamic as opposed to fixed in some capacity. So one of the big pieces of the Mayflower update is the change in silo architecture to support variable seeds per BDV. And as part of that upgrade, my understanding is that the seeds per BDV are likely to be reset to parity, as opposed to now being double for LP versus beans. And from an economics perspective, this is going to be a dramatic change in what Beanstalk is incentivizing. So in short, currently Beanstalk is placing a high priority for providing liquidity in the silo over just holding deposited beans. And moving to seed parity will change that such that Beanstalk is no longer prioritizing or offering any sort of bonus for providing liquidity as opposed to just deposited beans. Accordingly, you can expect, assuming the market's efficient, to reprice deposited beans higher relative to deposited LP tokens. And in doing so, you'd expect there to be some significant convert action from deposited LP tokens to deposited beans, which could potentially repeg the protocol. Now, the gauge system that will hopefully be rolled out within a year, let's call it, will make it such that the seeds per BDV for various assets are dynamic in some capacity. And the punchline around the Mayflower update is that while there is no dynamic seeds per BDV, the fact that the seeds per BDV are being set towards parity would be the most aggressive parameter that could be reached in the gauge system. Meaning Beanstalk is unlikely to ever offer a premium for deposited beans over deposited LP tokens. So the current proposal to move towards seed parity is very aggressive from an economic incentive perspective. And one could expect, it's hard to know exactly, but one could expect the market to respond by converting a significant amount of LP tokens to beans. And that would be very helpful from a peg maintenance perspective, at least in the short term. Harder to know in the long term.
But for unripe assets only.
Correct. But unripe assets are far and away the vast majority of liquidity in the silo at the moment. So it's a pretty aggressive move.
Yeah, and that liquidity is locked up too, so people can't pull that liquidity out. So all of that, whatever 10 or 20 million worth of liquidity is fully incentivized just to keep peg, basically.
And right now, the fact that the seeds are off means that the pricing isn't enough to repeg it, but the parity will be like as aggressive a response as possible.
And we'll just, add here that, initially the decision to incentivize liquidity more than deposited beans was, kind of made because intuitively it makes sense from a protocol perspective that, liquidity is more beneficial to the bean token overall than people just depositing and holding. But, the decision to make the discrepancy 4-2, twice as, receive twice as much grown stock per season was fairly arbitrarily made. From a architecture perspective, the beans, it was incredibly hard to make any changes, to these variables once a token has been whitelisted going forward. And, from that for that reason, the DAO has been unable to, very easily make any tweaks or changes to these arbitrarily chosen parameters. And, now going forward, the architecture is such that if at any point the DAO wanted to make further changes to stock per BDV per season, or seeds for any of the tokens, it can be done very easily with a simple BIP. There's now no need to perform any code modifications or changes to further update these values going forward. So even before the deployment of a gauge system, the DAO does have control to continue to fine tune or tweak, these incentive parameters, albeit requiring, a full BIP. But, at least the option and capabilities are there. If even, maybe this unripe change proves to be too much, now Beanstalk's just draining its liquidity and the DAO wants to change it back. Maybe it's not enough and the DAO wants to change, the Bean3 curve LP tokens to be 3 seeds instead of 4, etc.
Yeah, I mean, this one is one that I'm really excited to see become live, and I think this is going to be one that we'll be able to push. We have 2 threads coming out regarding converts, and then also kind of a little bit of just peg, addressing like the peg situation, and then these will dovetail off that really well. This upgrade will dovetail off that really well, and then obviously in the future having the dynamic changes is going to be massive. But yeah, Ishan, is there anything else that you wanted to cover?
Yeah, no, that was very helpful, and that's something that I think that we'll want to kind of focus on, because that's kind of and obviously not focusing on the idea of peg stability, but kind of more on the impact of the protocol. But yeah, I mean, I think that's a major piece of it that maybe prior to that we were maybe overlooking a little bit. So yeah, I think that's really helpful. Yeah, I think that puts us in a pretty good spot. I think I'm good on questions for now. I mean, I definitely think more will come up, but we have our little chat, so we can kind of continue to drop them in there. Last thing I wanted to touch on was that so we have the PR team in here, and so I know that there was a little bit of confusion, and that's kind of on me because I should have been more like telling you guys what to expect. But if you guys are interested, like a lot of times we get on the PR side like opportunities to do quick like kind of short-term comments on different articles. So like Patrick mentioned last week, like usually it's a pretty short timeline and a pretty quick, but I think it's a good kind of PR opportunity to kind of get in front of a larger audience. So like, for example, last week, and this is just an example of one, but we got an opportunity to report on the connection of crypto to like BRICS, and like kind of crypto being accepted by Russia for BRICS trading. And so like, not something that's directly associated with the protocol, but curious what your guys' appetite is. The only problem is that these are typically pretty short turnarounds that are required. So it's usually like kind of same day or maybe next day at the latest. Because they are just like very unique opportunities. It's usually like what happens is like, hey, there's a guy that's writing a story and he just goes out and starts looking for comments, and so he starts asking a bunch of people for comments, and then So then they come to us and they come to our team because we work with a bunch of different teams. And so they'll come to us and they'll be like, hey, do you have anyone that can comment on this? So, one, for us, it's like a good way to get into like a good spot with, good reporters. And two, it's an opportunity for us to get like an easy PR win. So I just want to kind of put that on your guys' radar of like, and it doesn't necessarily have to be Poos. It could be Guy. It could be kind of anyone associated with the protocol. But I don't know what like is that something you guys are open to, interested in? Usually they're like pretty random, but obviously we're only going to give you guys ones that are kind of associated with things that we talk about, right? Like we're not going to give you one on like, I don't know, something like totally random. Like if it's kind of stablecoin related or something like that, that's the ones that we'll kind of send your way. But in general, are you guys open to like kind of doing these and maybe like doing a quick turnaround on them?
Sounds good.
I would say
can just
send them our way, and we will try our best. But no promises that any given topic we have a comment on. But noted that we need quick turnaround.
Cool. Yeah, that's the only thing I wanted to kind of put on your guys' radar there. So I think they're cool opportunities. Getting in front of some different faces and commenting on some different stuff, showing our range a little bit. But yeah, besides that, I think this is a good point for us. Just like next steps on our end is that we're going to we're going to meet tomorrow. We're going to get the full we're going to go through the recordings, and basically what we're going to do is we're going to put together like a larger campaign about, hey, like this is something like the Bean Manifesto, and this is kind of what we're working on over the next year, and this is we'll kind of break down each of the different pieces, and basically we'll probably do it all in Mayflower. We'll do like a fun little meme campaign or something like that, and then we'll kind of like put out this entire roadmap of, hey, this is what you can expect for the Bean ecosystem over the next kind of year, or let's call it like 2-3 quarters. And so then the ideal outcome of that is that we kind of put a really big push behind it, and then people kind of see this big push and they're like, oh, okay, I kind of I didn't realize Beanstalk was still building like this, or oh, I kind of forgot about this thing, or maybe there's new people that didn't that aren't even aware of the protocol itself, and kind of they can see, oh, okay, there's like this big roadmap that's being planned. They're building all this cool innovative stuff. Like maybe this is a community I want to get involved in. This is a protocol I want to invest in. And so the end goal is obviously like the things that benefit the protocol, like holding Bean, depositing in the silo. But this is kind of how we think we can get that extra bump. And so we're going to keep a really close eye on metrics. Joey just put together his kind of Q1 quarterly kind of report that we're going to put up today. And so, this is, going after this campaign and then being able to look at, okay, this is what happened in Q1 and then this is maybe what happened in Q2 will give us a pretty good idea of like if things like this are actually impactful. So just so you guys are in the loop about what we're kind of doing and playing with. Cool.
This is great.
Awesome. Yeah, appreciate your guys' time. I think that's, and then yeah, we'll there's definitely going to be more questions about things we want to kind of re-articulate, but I think this puts us in a good spot to kind of get that going. And so I think it's going to take us basically like a week to put all of this together, and then we'll kind of show you guys everything of what we're doing, and then we're shooting to kind of launch this thing kind of mid-May, so maybe that second week of May, and then it'll basically run for a month, and then hopefully that'll take us all the way through actually like the deployment of wells and like the full Mayflower. So, get people excited, show them that we're shipping, and then kind of see what the impacts are.
sounds like a plan.
Cool. I appreciate your guys' time. And then yeah, last thing, just a quick reminder: 2 hours from now, we have the Twitter space with Fiscus. I have some questions. I'll drop them in our chat of questions that he's going to go through. And but it's mostly just like he's just like a stablecoin guy. He's like they're building like a kind of like a stablecoin information platform of just like, hey, these are basically they're building like a website of like, oh, these are all the different stablecoins, these are all the benefits, this and that. So good relationship to have. So just that's about 2 hours from now. To keep on your guys' radar. But that's all I have. Appreciate the time, and we'll chat Wednesday on our weekly.
Sweet.
Awesome. Thanks.
See you guys.
Thanks, everyone. Appreciate all the info.
Thank you guys very much. We appreciate you.
Yeah, appreciate you guys too.
Take care.